This is the Asia Trade. I'm Shery in Tokyo alongside Haidi Stroud-Watts in Auckland today. These are the top stories. Asian stocks set to advance on bets the Fed will be able to engineer a soft landing. The S&P 500 notching its 39th record of the year, with tech leading the gains. Traders on watch for any clues about further rate hikes in Japan, with the BOJ widely expected to hold steady today. Plus, the EU and China agree to intensify discussions to avert tariffs on electric cars, with a deadline just days away. Take a look at how U.S. futures are opening in the Asian session. We had the S&P 500 gaining ground to notch another record high, the 39th, of course, this year. And this, of course, making the S&P 500 top that 5,700 level. We not only had that outsized 50 basis point Fed rate cut, but we also had some labor market data that showed resilience, with the jobless claims numbers falling to the lowest level since May. The VIX also fell to around that 16 level, but of course we are headed towards triple witching when derivatives contracts tied to stocks, index options, and futures will mature on Friday. So we are watching out for volatility, especially perhaps volatility coming from the Japanese yen. Of course, we have seen a lot of moves in the Japanese markets. Take a look at how we're setting up for the Asian session as we head towards the BOJ policy decision. No change expected on the rate front, but we have seen the yen really strengthen and weaken against the U.S. dollar. We have options showing that conviction for yen bulls has taken a little bit of a hit this month, given, of course, that the Fed is right now a dominant factor. I talked about that outsized Fed rate cut, but at the same time, Chair Powell talking about not being in a rush to continue at that pace, really leading to the yen falling as much as 1.2% in the overnight session. We're recovering a little bit, and we're at around that 142 level. But it's really about the Bank of Japan's decision today, right? Our next guest is focused on Governor Ueda's assessment of inflation in Japan as we await the Bank of Japan's rate decision. Joining us now is Ayako Fujita, Chief Japan Economist at JP Morgan Securities Japan. Ayako, great to have you early in the morning here in Tokyo.
Thank you very much for having me. Good morning.
So what are your expectations? Because all economists don't expect a change in the rate front, but you're watching the yen so closely given how much it's moved.
I think the biggest focus this time will be actually how much confidence that Ueda will provide to us for the next rate hike.
The messaging is so important, right? Because what happened in July 31st, what happened after April when the yen just plunged, how difficult is this task for the governor?
I think the BOJ has already learned lessons, because the biggest reason why actually market got really surprised after July hike was actually market has yet to fully digest the BOJ's messaging, because even before July hike, BOJ sent a very hawkish signal. But yet, actually, market didn't believe it. So after that, actually, BOJ has started sending a very consistent message that actually a multiple rate hike is coming. So I think BOJ will repeat this message at this meeting as well.
Yeah, I mean, we already had a few board members coming out and sort of leaning hawkish, didn't we?
It's really actually a aligned message. Actually, everybody's saying actually, the rate hike is coming. Actually, no actually dovishness is there. So I think actually, this is also actually echoed with, this is likely to be echoed with governor this time.
Bloomberg Economics right now thinks that the next rate hike will come in October, not in December. What's your call?
I still expect in December, because the BOJ's strategy is very gradual rate hike rather than rapid rate hike, because the consecutive rate hike is a little bit actually damaging to the economy. So therefore, I think actually BOJ might probably prefer to wait a little bit more to get more confidence. And by December, BOJ can get more confidence about actually trend rise in wages, and also the wage increase is translating into inflation as well.
Why would a rate hike earlier be more damaging to the economy? We saw perhaps private consumption sort of coming back. We saw that wage growth that you talk about. So how fragile is the Japanese economy right now?
I think actually, probably in the next few hikes is probably okay for the economy. The economy can digest it. But the biggest concern for the government, actually, for the BOJ is actually how much government can quickly adjust to a higher rate environment.
Especially at a time when the Fed is also cutting rates. How does that factor into the BOJ's calculation?
I think, of course, the most impact is through the dollar yen, and current actually, dollar yen actually down. It's a little bit actually, providing a confidence about BOJ that actually BOJ will not be forced to be in rush. But still actually, I think actually, BOJ probably doesn't want to actually deliver additional rate hike when the market gets a little bit fragile to digest how much actually additional rate cut is coming from the Fed side.
I mean, dollar yen is a little bit down, but remember when it was at 160 in July. So is there still a little bit of a risk that we could be headed towards more Japanese yen weakness if the Fed continues this messaging that, yes, they will front load the rate cuts, but not at the same pace?
Yeah, that's possible. But at the same time, actually, the BOJ is also gradually delivering rate hikes. So probably I think the current level of dollar yen is very comfortable level for BOJ and probably the economy as well. So of course, if the yen depreciation pressure re-emerge, that's going to be a little bit of risk for BOJ. But it's not the kind of environment right now. So therefore, I expect actually October rate hike is not absolutely necessary for BOJ.
Yeah, when we talk about how comfortable the BOJ or the government or corporations are, what is that sweet spot for dollar yen?
My expectation is somewhere between 135 to 145. I think this is a kind of level that many corporates signal that this very comfortable level in terms of competitiveness and also the probably domestic consumption side as well.
Could that change? Could we see more volatility in the yen depending on how the LDP presidential elections go next week?
That's possible because the current the running candidate, leading candidate is both of them, three of them kind of have a very different policy agenda. So its market is really watching on it, and if somebody who are stating more kind of expansionary policy both on monetary and fiscal, that could actually affect the dollar yen as well, possibly.
Yeah, there were some calls that I was watching that perhaps if Ms. Takaichi actually gets the premiership, that could actually be yen negative because she wants more BOJ easing. How insulated is the BOJ from political pressure?
I think it's of course, the environment is totally different from 10 years ago because 10 years ago, inflation was not there. So therefore, government can expand monetary and fiscal quite aggressively. But even if Ms. Takaichi wanted to expand both fiscal and monetary, but inflation is already running above 2%. So how much of flexibility government can have and also government can put on the BOJ, pressure on BOJ is a little bit of a question this time, to be honest.
And in those inflationary pressures, we are getting the CPI numbers later today. Are we going to stay still above that 2% level?
I expect that we will probably get some sign of inflation firming, particularly for underlying component. And our expectation is this strong wage momentum is gradually translated to inflation, underlying inflation towards the end of the year.
And actual consumption, because I think that's been always the issue with Japan, right? I mean, people are saving and saving, but not actually going out and spending.
I think consumer sentiment is gradually picking up, and the recent monthly consumption data is positive. Even June, the actual consumption data has been positive. So we expect that this wage momentum is really translating to the inflation, and that's to consumption. And this strong consumption momentum will support the inflation as well. So it's going to be a positive cycle for what BOJ has been looking for long.
I know that you're an economist, but I wonder how closely you're watching the yen carry trades. I mean, that was a really big issue in global markets with that unwind because of the sharp strength of the Japanese yen. Is that still a concern?
I think most of the position has already withdrawn. So this should be fine. But the biggest concern over the medium to long term is domestic consumers' activity, domestic households' activity. Because if BOJ moves too slowly, then real interest rate will continue to remain negative, deeply negative for long. So it will provide a little bit of incentive for Japanese households to put money onto our overseas asset rather than domestic asset. So it's not necessarily short-term carry trade, but long-term capital outflow is a bit of concern for BOJ over the long term.
Ayako Fujita, it was really good to have you with us in the Tokyo studio. She's Chief Japan Economist at JP Morgan Securities Japan, and of course setting up the day for us as we head towards that BOJ policy decision. We have more ahead on the Asia trade, including market outlooks from Barclays and Amundi Japan. Plus, we discuss Canada's policy on Chinese EVs with their Minister of International Trade. And ANZ New Zealand's Chief Economist joins us to tell us why she thinks New Zealand's economy remains very soggy. This is Bloomberg. These are the latest from the corporate front. Mercedes-Benz has cut its financial forecast for the year on a rapid worsening of its business in China. The luxury car maker now expects adjusted return on sales to be between 7.5% and 8.5%. The prior forecast was as high as 11%. The profit warning is the latest setback for Germany's industrial sector, left reeling since Russia cut off cheap gas supplies. Skechers shares delivered the worst daily performance since February after it warned that China's sales will be under pressure for the rest of the year. CFO John Vandermoor says the back half of the year is going to be more disappointing than expected. Concerns have been growing among global retailers about weakening demand from Chinese consumers. Nike has ousted CEO John Donahoe and is bringing longtime executive Elliott Hill out of retirement to return the struggling brand to its glory days. Hill joined Nike in 1988 and served as president of consumer and marketplace before he retired in 2020. Nike slashed its revenue forecast in December, losing ground to competitors including Adidas, On, and Hoka. Now, we've seen that in the aftermath of the pandemic, rising costs, middling wage growth, and unsustainable debt, they're all taking a major toll on U.S. consumers. Now, Bloomberg Originals has been looking at whether Fed rate cuts may help or if easing has come too late.
Philosopher Thomas Carlyle called the study of economics the dismal science. But that was before they invented shopping sprees. In fact, a great deal of the entire global economy relies on Americans emptying their wallets.
So you can't understand the American economy without understanding the consumer.
I mean, it makes up close to 70% of GDP. It could be clothes, it could be food, groceries, restaurant meals, airplane tickets. It's really any kind of good or service that Americans buy.
If you look at some of the traditional indicators, the American consumer is still holding up, right? People are still spending at a healthy pace. But if you look under the surface, things aren't looking as great anymore.
I just honestly don't know how people are making it.
This is ridiculous. It's the current economy we live in.
The prices of goods, the prices of food, they're never going down again.
Is the American consumer tapped out? It's really complicated.
And subscribers can see that documentary in full on the terminal and our website, and it'll be up later on the Bloomberg Originals YouTube channel as well. Now, the European Union and China have agreed to intensify discussions on averting looming tariffs on electric cars ahead of a deadline that's only days away. For more, let's bring in our China correspondent, Min Lo. So, Min, has there been any progress when it comes to those talks so far?
Yeah, so the Chinese Commerce Minister Wang Wentao had a high-profile meeting with the European Commission's Trade Commissioner Valdis Dombrovskis, but there wasn't any breakthrough when it comes to averting those tariffs. But all is not lost. Both sides agreed to continue intensifying those talks, and we know that China had previously offered to provide a price floor to the cars sold in Europe in order to address concerns that Chinese cars are undercutting the prices of domestically produced cars, and the EC had previously rejected that proposal. But what we're hearing now is that both sides are agreeing to relook at price undertakings, which is the control of prices and volumes of car shipments from China to the EU. Now, we know the Chinese Commerce Minister Wang Wentao has been on this whirlwind trip to Europe. He was in Germany, in Italy, and then in Brussels, really making this last-ditch effort to try to lobby EU governments to change their vote. The vote was slated for September 25th, which is next week, but Politico had reported, citing 3 government sources, that that vote is now taken off the agenda of the September 25th meeting. So it may be delayed. Perhaps September 30th is another date that we're looking at.
I mean, the Chinese Commerce Minister had also met with some car makers in Brussels. What came out of that?
Yes, so he attended the China-EU electric vehicle event in Brussels that was attended by 30 top executives of car companies from China and the EU. And look, we know that China had previously hinted that it could impose tariffs on vehicles with large engines, and that affects companies like BMW, Mercedes. Germany and Spain will be affected the most because those are the 2 largest car makers, and China is a huge market for them. BMW and Mercedes, they get a third of their sales from China. But on the flip side, Chinese companies really need the EU market as well, because the Chinese companies are undergoing a price war to try to gain market share within their own country. So the only survivors are the ones that can have a solid market share overseas to help them survive through that price war at home. So a symbiotic relationship that we're seeing between EU and China, and we know Germany has been most outspoken in opposing the tariffs, saying that a trade war must be avoided at all costs. So we'll see how the talks continue over the next week or so before the final vote.
Bloomberg's China correspondent Min Lo there. We have more ahead on the Asia trade. This is Bloomberg. Time for morning calls ahead of the Asia trading day. Wall Street's biggest banks are divided over how fast and deep the Fed will cut rates over the next year. Goldman Sachs now sees quarter-point reductions at every meeting from November through June. JP Morgan still expects another half point in November, depending on the state of the jobs market. Bank of America thinks that the Fed will get pushed into deeper cuts, while Barclays sees further quarter-point reductions in November and December. In the markets, traders are pricing in about 70 basis points of easing left this year, a more aggressive view than the Fed's forecast in the latest dot plot. BMO Capital Markets has raised its year-end target for the benchmark S&P 500 to 6,100. Strategists say the current market backdrop resembles the mid-1990s when stocks sustained high multiples for years through the dot-com bubble. They also attribute their bullish view on the Fed easing and improving market participation beyond the Magnificent Seven. Neuberger Berman senior portfolio manager Steve Eisman says it's better to focus on the economy rather than the Fed. He told us why he doesn't see a recession coming for the U.S. as the market continues to digest the Fed's 50 basis point move.
Prior to Fed Day, I get 3,000 emails about what the Fed's going to do, and then the Fed does what it does, and I get emails of redlined. It's like every word that is changed is crossed out. Every new word is put in. It's like they treat this like Moses coming down with the tablets. Are the Ten Commandments still in the same order that they were in? But it's an important communication function because the Fed knows they treat it like the Ten Commandments, so they take it seriously as well. But 25 basis points, 50 basis points. And every time the Fed does whatever it does, the market has absolutely no idea what to do the very first day. And then think about today. So the market's up a lot and rates are higher. Like, that shouldn't be. If everybody's so into, like, what's the Fed going to do? Are rates going to go lower so the stock market went up? Well, rates are up and the stock market's up. So I think it's worth a lot more. It's much more important about how's the economy doing. And if the economy is fine, you could buy stocks, and if the economy is going to go into recession, you can't. The rest is gobbledygook.
What do you think is going to happen, though, at this point, though? Because you think about what the bond market is doing, and it's showing you a different story. The exuberance in the stock market is not being reflected in a bond market that seems to be more worried.
That's the point.
Who's right? Yeah, but
I know the bond market
right?
is worried. The economy is okay. So why should long-term rates go down that much?
Well, tell me this. You were looking at a market not only rallying to intraday records today, you're looking at a Philadelphia Semiconductor Index up almost 3.6% today. How are rates going to impact the AI story?
They don't.
So
they don't impact it at all.
What is the sense
like I said, people spend a lot of money and a lot of time trying to figure out what Powell's going to do, and that was intentional, by the way. And I don't think it's look. If the Fed's raising rates very, very aggressively, that's important, and the Fed's cutting rates extremely aggressively. That's important. Everything in the middle, it's just not that important. It's better to focus on the economy.
So what is your take on the economy? I mean, we saw a retail sales number the other day that I think was surprising. If you don't see that the U.S. consumer sort of beats expectations every single time, right? So the economy's growing at like a 3% clip. Unemployment's at 4.2%, right? Inflation's back down to like 2.5%. Is everything good?
Well, not everything is good.
No, but I mean,
there has definitely been a slowing in the economy.
Was it a soft landing? Was it a soft landing?
Well, there's been a slowing in the economy. The lower-end consumer is somewhat stressed. They're spending less. But, there's been an increase in delinquencies, but not terrible. So on the margin, things are a little bit slower, but inflation is cooler. So as far as I'm concerned, things are fine.
Neuberger Berman Senior Portfolio Manager Steve Eisman speaking with our colleagues Shonali Basak and Matt Miller. Take a look at how we're setting up for the Asian market opens, because we had the S&P 500 hitting another record high this year, the 39th already, past that 5,700 level. So we're coming from some positive backdrop from the U.S. side. Futures are under a little bit of pressure at the moment. Chicago Nikkei futures right now not doing much, but this, of course, after we had the Nikkei gaining for the past two sessions. We have seen a lot of volatility in the Japanese market, so the 14-day RSI is still close to oversold levels for Japanese equities. The Topix is also very close to the oversold level. It's actually underperforming other Asian peers now for a sixth consecutive month. Really a function of what the Japanese yen is doing, right? Because we have seen a lot of volatility on the Japanese currency. Take a look at how FX is trading right now, because the dollar fell, but it was also very choppy trading. We saw it swinging between gains and losses early in the session to just end the session a little bit lower and under pressure. We had treasuries pretty mixed, but it was the fact that the shorter maturities were outperforming and the two-year yield fell below that 360 level. So all to do with expectations of where the Fed goes from here, right? We had that 50 basis point rate cut, but at the same time, what does that mean for the pace of future easing later in the year was a key question for economists and investors. So we had the 10-year yield rising slightly as well, and a little bit of a mixed picture on the treasury space, but we're still near one-month lows. And when it comes to Japan, we'll be watching the JGB markets as well, because they're really not factoring in those potential additional rate hikes that might come by the end of the year. Of course, we're not necessarily expecting anything for today's session from the BOJ when it comes to the rate. Most economists thinking perhaps that rate hike will come in December, but we'll be watching what the commentary is out of Governor Ueda today and what sort of signals he sends to the markets. We have more ahead on the Asia trade. This is Bloomberg. We have breaking news out of Japan. We are getting the CPI numbers and core consumer price inflation coming in at growth of 2.8%, excluding fresh food year on year for the month of August. This is a slight acceleration from the previous month and is coming in line with expectations from economists. When it comes to the headline inflation number, year on year growth of 3%, also an acceleration in line with estimates. Now, core CPI, exclude fresh food, exclude energy, and its growth of 2% for the month of August. Suffice it to say that we're seeing rising labor costs, a weak Japanese yen, perhaps really leading to those broad-based consumer price gains. We had already seen the sort of trend from the Tokyo August CPI numbers, which are, of course, a leading indicator of the national gauge, and we're seeing the core CPI right now coming in at growth of 2.8% year on year for the month of August. Another month, more than 20 already, where inflation here in Japan and the core CPI numbers have stayed above the BOJ's 2% inflation target. Take a look at how the Japanese yen is trading at the moment, because we're seeing a little bit of weakness on the Japanese yen. We're headed towards that 143 level against the U.S. dollar. But this is, of course, after a lot of volatility in the Japanese currency. Overnight, it fell as much as 1.2% before pairing those declines, and we're still at around those mid-142 levels. Really a lot to do, not only from the expectations of what the BOJ will do, perhaps not in this meeting because nothing is expected on the rate decision this meeting, but perhaps in future meetings and the tightening trend. But the dominant factor, of course, has been the Federal Reserve because we have seen it weaken. We've seen the yen weaken after Chair Powell indicated that he's not in a rush to continue that easing to the pace of that outsized 50 basis point rate cut that we got this week. Let's bring in Mitul Kotecha. He's head of FX and EM macro strategy Asia at Barclays. Mitul, great to have you with us to sort of try to digest what's happening in the markets right now. Should we start with the yen and the function of the Fed and what we can expect from the BOJ and why we're seeing these moves in the Japanese currency?
Sure, of course. So firstly, in terms of the BOJ, we don't, as with most people, don't look for a move at the upcoming meeting. Our forecast is for the Bank of Japan to tighten again in January, and we still expect a terminal rate of around 75 basis points. Now, I think the yen reaction, as you say, has been interesting. It's this move that we've seen towards sort of 140 level and below hasn't seemed to be sustainable. I mean, we could see further dollar selling against the yen into the next several weeks, but our view is that we're probably near the bottom in terms of dollar yen. In fact, the fact that historically what we've seen is the dollar tending to weaken ahead of the Fed's first rate cut and then stabilize and strengthen thereafter, in our view, perhaps suggests we've seen the bulk of that unwind of the dollar yen trade. And we could potentially see some front loading of the upside going forward. So we still think that ultimately, as we go into next year, dollar yen will see further upside, and we think the move now it seems fairly exhausted around this 140-ish level.
So you're thinking that the Japanese yen will continue to weaken from now on out. Is that also a function because you're pushing out the next rate hike to January when other economists are seeing it, perhaps December? Bloomberg Economics is seeing it in October, actually.
Yeah, I mean, there's definitely a risk that we see the Bank of Japan move earlier. We wouldn't rule out a move, for example, in December. But our view is that they can be a little bit more patient, wait till January. There's obviously still uncertainties around the LDP election, etc. And maybe the Bank of Japan would like to see some further evidence and be no real rush to tighten again fairly quickly. But again, December or January, there is obviously another move in the offing fairly soon. And that hike may be followed later on into next year by another one. As I say, we could see terminal rates around 75. But I think, again, it's hard to say that we've hit the bottom just yet. I think we probably will consolidate around here. We still think by end of this year, dollar yen may end up slightly lower than here, around 139-ish. But ultimately, we, as I mentioned, we do think that the bulk of the move in dollar yen, that sell-off in dollar yen that we've been seeing in recent weeks is starting to look very exhausted around these levels. Now, of course, the interest rate differential is also very important, and that means the upside in dollar yen is unlikely to be anywhere near where we saw just a few months back around 160. If anything, we could see an upside closer to around 145-ish, 150-ish maybe, but certainly 160 now looks like it's very unlikely to be reached again anytime in the next several months.
And you think that there will be a meaningful impact coming from who becomes elected as the next president of the Liberal Democratic Party on BOJ monetary policy? Because these candidates, especially the leading ones, have expressed some different views when it comes to what the BOJ should do next.
Well, that's right. Look, clearly there is some political pressure on the BOJ, and that may have some implication on policy as well going forward. But at the same time, BOJ is singing to its own tune. It's unlikely to be steered too significantly from that political pressure. But again, as you said, there is a very different stance amongst the candidates for the LDP president. So again, I think there is clearly some uncertainty as to what that means in terms of Bank of Japan policy going forward. And of course, you do see anyone on the more dovish side being elected, then again, that could mean perhaps risks that the BOJ may not move as aggressively as, or may move as quickly at least, as we expect.
If you're thinking that perhaps we're going to consolidate on the Japanese yen around these levels and perhaps a little bit of strength towards 139, what does that mean for the other side of those trades, especially among emerging market currencies that took the brunt of the yen carry trade unwind back in July and August?
Well, I think we will ultimately see a return to carry. And I think, this environment now where the Fed has cut 50 basis points and the markets seem to be fairly reassured, we're back into a little bit of a risk-on environment here. Volatility, we think, will remain relatively low as well in the next several weeks. So it's fairly conducive to return to some carry trades. And the one that we are looking or favoring at the moment is short dollar Brazil, where we've taken the view that the real will offer some attractive carry, further attractive carry, and we'll see a return into that trade, especially as Brazil has started to actually tighten policy, and we expect to see further tightening in the months ahead. So again, that will add to its attractiveness. But again, I think some of that massive unwind that we've seen in terms of carry has been exhausted now. And I think in this environment now, with the Fed having started its easing cycle, we'll start to see some move back into some high-yielding EM carry trades. There's not much on that front in Asia. The Indian rupee perhaps is the one to look at in Asia, but we may see a little bit of a return. And we've seen some big moves just in the last couple of days in the rupee. So again, that could be one that could benefit from a return to carry.
It's been really interesting to see how the Brazilian real is moving and how that central bank has been really out of step with other major central banks sort of leading the way into the tightening, into the easing and tightening again. But when it comes to LATAM currencies, where would you put the Mexican peso as well, given that they're so closely linked to what happens to the U.S. economy as well?
That's right. We're perhaps a little bit more circumspect on the Mexican peso in the sense that it's not as obvious in terms of as you said, we could see if there is a second President Trump administration, what that would mean for Mexico and for manufacturing there, and especially if we see some pressure on the USMCA, for instance. So again, it's not clear that the peso would be a key, as much of a beneficiary in this environment as, say, the real, which is clearly seeing a different picture with a central bank that's tightening policy and that offers more attractive carry. With Mexico, clearly there has been some further concerns as well. So again, it's probably not as obvious that we would see the Mexican peso being a beneficiary in that environment, of course, ahead of the U.S. elections, where there is so much uncertainty about, obviously, the outcome that comes through.
And do we still speak about the Chinese yuan as one of those anchors for emerging market currencies as that time passed? And where is the renminbi headed, given that China faces so many economic challenges, and it seems that more stimulus and easing is the only way to go from here?
That's right. Well, I mean, clearly the yuan has strengthened alongside a lot of other currencies on the back of dollar weakness. And we saw the move below 710 in recent sessions. And look, I think ultimately we would still favor a weaker Chinese currency. Our view is that ultimately, as we get through into next year, by around mid next year, we get to about 725 on dollar CNY. We think structurally, as you mentioned, the economy is under pressure. There is an over-reliance on exports to boost growth. And ultimately, that structural pressure will weigh on the currency as we see some rebound in the dollar into next year as well. So these gains that we've been seeing in the CNY, CNH, are unlikely to be sustained below 710 in our view. Now, of course, there is some risk that as we've gone stronger in the Chinese currency, we see export corporate dollar conversions, and that may help to keep a little bit more strength in the Chinese currency. But again, I think this is temporary. We are approaching better levels in our view to look to be short the currency. We do hold a long dollar CNH trade as well, of the view that the currency, the Chinese currency, will weaken in the months ahead.
Mitul, Kotecha, always great to get your views. Head of FX and EM Macro Strategy Asia at Barclays. Thank you so much for joining us. And let's also bring in Garfield Reynolds, who leads our Markets Live Asia coverage, because, Garf, we're talking about China, about the yuan, and of course we still have the 1-year medium-term lending facility and loan prime rates to come out of China, not to mention that we have also the Bank of Japan, of course. And I want to say happy Friday, but there's still a long way to go.
Yes, indeed. And in some ways, China might actually be what matters more today, even though there's nothing on the schedule for China that necessarily would make that so. But we did have some strong moves yesterday for Chinese stocks, for the Chinese yuan, that underscored some expectations out there that now that the Fed has eased, we can see some actual, at the very least, some actual easing, if not perhaps some bold easing from the Chinese authorities. And that's very much what equity investors are going to be looking for, both inside China and even beyond, across the rest of Asia. It's difficult for markets here to get too ebullient more broadly as long as China continues to weigh down the outlook. And indeed, there's an argument to be made that a weaker China helps to create some risks globally. We had FedEx and Mercedes overnight raising some concerns about what's going on with their profit outlooks, and Mercedes in particular said that was all about China.
Is it fair to say that we could just expect more volatility from here on out? Because we're watching the Japanese yen so closely, but of course we're also headed towards triple witching Friday.
Yeah, some volatility is definitely possible with triple witching, and also that you would think that the setup for the Bank of Japan is sufficient to make for a potentially calm day. We've had a strong rally off of the Fed. The inflation figures have come in line, but not too spicy. Yes, the BOJ is going to remain on its path towards hiking. It doesn't scream that there's a need to spook the horses, especially with the election coming along. So the most likely scenario has to be that while Ueda emphasizes that tightening is coming, he keeps a fairly tight grip on any thoughts about when that might come. So, I don't think he'd rule out October, but he's unlikely to rule it in. We do have the elections coming up in the US. We have the political situation in Japan. If Ueda keeps, as it were, a bit of a low profile for a BOJ day, then risk assets can march on higher with concerns about a stronger yen put to bed for at least until the next US non-farm payrolls comes along at the beginning of next month, which these days that's perhaps the biggest event risk, because that's probably the one thing that could really upend those expectations for a soft US economic landing, which are so very crucial for the levels of strong risk sentiment that we've got right now.
I stopped listening after you said not too spicy BOJ policy decision today. I'm going to steal that. Gabriel Reynolds, who leads our Markets Live Asia coverage. Of course, I wouldn't really be surprised at anything from the BOJ these days, but you can turn to your Bloomberg for more on the BOJ decision coming in a few hours later. Go to TLIV Go to get commentary and analysis from Bloomberg's expert editors. And don't miss also a big interview coming up today. We'll be speaking exclusively to New Zealand's Prime Minister Christopher Luxon about his economic policies. That's 9:40 a.m. Hong Kong. We have more ahead on the Asia Trade. This is This is the Asia Trade. Here are some of the stories that we're following from around the world. Lebanese authorities say 37 people have now died from this week's series of walkie-talkie and pager explosions, with almost 3,000 others wounded, many suffering eye injuries. Hezbollah's leader Hassan Nasrallah says Israel's suspected attack crossed all red lines but won't stop his group's attacks on Israel. The attacks have increased fears of a full-blown war between Hezbollah and Israel. The Wall Street Journal says senior U.S. officials don't expect Israel and Hamas to agree to a ceasefire and hostage release deal before the end of President Biden's term. That's even after the White House said the warring parties had already agreed to 90% of the deal. A Middle Eastern official also told the paper negotiators are in wait-and-see mode until after the U.S. election in November. Sri Lanka says it's reached an agreement in principle with bondholders to restructure over $12 billion in bonds. This comes just days before the country heads to elections. The government and bondholders agreed on terms including a 27% haircut on the nominal amount of existing bonds. The latest deal also retains a plan to issue notes whose payouts are linked to economic growth. Take a look at how commodities are trading, because we do have, of course, conflicting really dynamics in the markets, whether it's that global demand picture, but also geopolitical tensions. Oil advancing in the overnight session as we continue to see that risk-on sentiment around global markets with that outsized Fed rate cut. We are not seeing much movement in the Asian session, but we have been around these levels for a while, and we're still headed for a quarterly loss for oil prices, given economic concerns on China. We're also watching iron ore. We have now seen it fall to the lowest since November of 2022. We're seeing a little bit of upside in the Asian session, but a lot to do, of course, with what I mentioned with China. And same deal with copper, although we're seeing some gains. It's actually climbing to a 2-month high after that U.S. Fed rate cut of 0.5%. Copper, in fact, has extended gains to as much as 2% at one point in the overnight session on optimism over the Fed's easing. But U.S. Transportation Secretary Pete Buttigieg now saying that his department wants to be more proactive in prioritizing the interests of the traveling public. He spoke to us after his office gave the green light to the merger of Alaska-Hawaiian and Hawaiian Holdings.
We believe it really does represent a new chapter in the way the DOT approaches both consumer protection and competition. Our department has a lot of authorities, and in my view, that means a lot of responsibility when it comes to competition. I think the Department of Justice's role is well known and well understood. The Department of Transportation's role less so, partly because the department has not been very proactive over the last 30 years or so as these airline mergers have come along. But we are concerned with competition, and we are also concerned with consumer protection. And so when this deal came before us, we saw that the Department of Justice did not intervene. We still wanted to make sure that there were protections in place, which really come into two categories. One of them has to do with service itself, making sure that in places like inter-island service in Hawaii, that nobody is made worse off because of this deal. But secondly, consumer protections that are in line with what we're trying to do more broadly for airline passengers. Things like making sure that there's family seating available. Alaska does that. Hawaiian had not. We want to make sure it's the better and not the worse of those two, and so they've committed to that. And then probably the most new, and I think one of the most important things that we're doing, the rewards program, and making sure there are provisions related to that points and miles system too. That really is breaking new ground for us as a department, but it's increasingly a very, very important part of the customer experience, and it's looming larger and larger financially too. So we wanted to make sure it was contemplated in this agreement before we approved of the merger.
Secretary, we're talking about fewer airlines, et cetera. We're having a question about whether we're going to have fewer planes. What's the threshold for the United States government to subsidize Boeing at a time where there are real questions about its ability to continue to invest and its workers are striking?
Well, Boeing has historically been an aerospace leader, right now encountering a number of issues related to quality and safety that the FAA has required them to demonstrate how they're going to address, and, as you mentioned, labor issues as well. If you look at how Boeing competed so well in the past, it had to do with a focus on quality and on safety. And I believe that's absolutely compatible with doing right by workers and with Boeing's place in America's economy. But again, the most important thing, certainly from a Department of Transportation perspective, is that the safety and the quality are there, because everything else sort of gets multiplied by zero if you have those kinds of problems that can, sure, they can shake the market, but the most important thing is the safety of the traveling public.
U.S. Transportation Secretary Pete Buttigieg speaking with Bloomberg's Lisa Abramowitz. And these are some of the other stories that we're following at the moment. Bloomberg has learned that Johnson & Johnson is boosting its offer to settle baby powder lawsuits to more than $8.2 billion. Sources say under the new terms, claimants could get bigger payouts and about $650 million in legal fees covered. The drug maker earlier offered a $6.5 billion settlement. J&J maintains it's now withdrawn. Talc-based powders never caused cancer. Elon Musk's X has told Brazil's Supreme Court it has appointed 2 attorneys to represent it in hearings. This comes nearly 3 weeks after a top judge ordered internet providers to block access to the social media platform. The appointment of legal representation could move X closer to restoration in Brazil, where Musk has been battling court-imposed restrictions. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how the Japanese yen is trading at the moment. We're seeing still some downside for a second consecutive session and now headed towards 143 against the U.S. dollar. Of course, we have seen not only the function of the Federal Reserve, but we're headed towards a BOJ policy decision where unanimously economists don't expect any rate change this week. The expectation is for most likely a rate hike in the month of December. But so far, we have seen the pressure after the FOMC not only cut rates by 50 basis points, but also said they were in no rush to keep at this pace. The market opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after another record high for the S&P 500. We're talking about the 39th already this year. Of course, we had that outsized 50 basis point rate cut by the Federal Reserve, and investors digesting that, but also stronger than expected labor market data with jobless claims falling to the lowest level since May. And we had the VIX falling, but do brace for triple witching, where we have derivatives contracts expiring on Friday. But of course, also, you're watching at the Bank of Japan right now. We do have the decision coming up. Not really much expected in terms of the rates. Really, unanimously, economists don't expect a change for this meeting. But we're watching the Japanese yen because we had seen it weaken against the U.S. dollar for 2 consecutive sessions, especially after the Fed's rate decision. And they're signaling that they're in no rush to keep cutting at that pace. Take a look at the open in Japanese markets. We're seeing some upside of 1.5%. We had seen already that upside coming from the Nikkei and the Topics yesterday when we had the Japanese yen weakening. We continue to see the downside pressure against the U.S. dollar, really close to that 143 level at this point. We'll be watching the JGB markets as well because we had 10-year yields rising slightly in the previous session, but we're still at around 1-month lows, and we're hearing that SBI Securities saying that we're really nowhere near to where rates should be, or markets are really not factoring in additional rate hikes. Bloomberg Economics expecting that rate hike to come in October, but other economists, and most of them thinking it could be December. Take a look at what the Kospi and the Kosdaq is doing. We are, of course, seeing gains as well for the South Korean market. We already closed at the highest levels since the beginning of this month. The Korean won also rising alongside other Asian currencies against the U.S. dollar in the overnight session. We're continuing to see a little bit of strength early in the session. In fact, Asian currencies right now hitting the highest levels in more than a year. But really the focus today on what's happening around central banks. Take a look at how the ASX 200 is coming online. We do have the RBA rate decision next week. We're seeing some upside for equities in the Australian session. We already had the Australian dollar pretty strong given the jobs data that we got from Australia earlier this week, with the August employment numbers rising more than economists had expected. And you can see right now the Aussie dollar holding steady, and the Treasury space also not a lot of change at at the moment, but of course we finished the session a little bit mixed with 2-year yields falling below that 360 level, so we had that downside on the U.S. dollar. Today, we'll be factoring in as well what's happening in the Japanese macroeconomic environment, because we already got the CPI numbers as well earlier today, and we are seeing those inflation pressures on the consumer side of things still remain above that 2% level. Let's bring in our next guest. She's positive about the macroeconomy. She also expects the yen to continue to strengthen. With us now is Hiromi Ishihara, head of equity investment at Amundi, Japan. Hiromi, great to have you here in the studio. As we head towards that exciting, not exciting BOJ policy decision, you're expecting the yen to strengthen?
Yeah. So, but I do not expect that the yen, continues to strengthen in a rapid pace, rather the moderate pace. And because of the reason is we don't think that the BOJ is going to rush to raise the interest rates. And at this stage, FRB is already taking the action. So, BOJ actually has enough time to assess the U.S. economy development as well as how the Japanese macroeconomy is developing. So I think, it's the yen, the trend going to be the strengthen, but it would take time,
And it seems to be the calculation because the options markets right now and those yen bulls positions kind of taking a hit this month. But when you're saying the trend is going to be appreciating, what will really support that, and how soon could the rate hikes come?
The earliest we expect the end of this year, but it could be the beginning of the year, because I think, we have a little bit busy political calendar in the autumn. And then also by the end of this year, BOJ could see enough results of wage increase actually continue to rate. So inflation is also another factor, but as long as we have the wage growth like 3% year-on-year base, BOJ could downplay actually the inflation and consumption side, because once we have the enough wage growth, actually consumption and inflation could follow eventually.
Have we seen the consumption side of things coming back in Japan, and what would that mean for consumer-exposed sectors in the Japanese markets, especially if the Japanese yen sort of consolidates around these levels?
Yeah, so I think it's positive for the consumer names, but I prefer to play in more like domestic-oriented, but it's more exposed to capex side, because GDP second quarter results and also Tankan actually showing the great progress on a capital expenditure side from private sector, which means that it confirms the positive stance, positive view on business momentum by Japanese corporates. And certainly there are quite a lot of names who could be the beneficiary from increasing demand for capex. So we prefer to play on that side rather than consumption, because we expect the consumption picking up, but it's slowly.
I'm not sure if you're allowed to share those names, but at least can you tell us what sort of sectors you're looking at where we could see that capex and investments?
Sure. So I'm not allowed to say the specific name, but certainly IT software is one of the good example. And also electronics, machinery. Machinery is also quite a lot of them actually exposed to the external demand as well, but there are certainly names which have a lot of exposure to domestic activities.
And a stronger Japanese yen would help them?
Yes, certainly.
There's been a lot of positivity around Japanese names, especially because of the corporate governance side of things and what the TSE has tried to do in that sort of naming and shaming when it comes to corporate governance improvements. Have you actually seen tangible results from that, where people have come out with blueprints to improve shareholder value, or has a lot of it been just fluff?
I think it's the progress to be made so far. It's great so far. Definitely, for example, unwinding cross-shareholdings, it's actually faster than initially expected. So, and we expect more to come. So the last year, what we saw was more like shareholder return, dividend hike, buybacks, etc. Buyback is still strong for this year, and we expect it's going to be historical high this year as well. But we do believe that going forward, the capital raised from unwinding cross-shareholding
should be deployed to more growth strategy, business portfolio management. That definitely benefit Japanese corporates in the midterm.
The reason that I was asking was that we were speaking to Nippon Life earlier this week as well, and we heard that perhaps some blueprints are not as strong when it comes to improving corporate governance. And we know that return on equity of topics firms has remained about 8%, which is still, compared to peers, is not very high. What do you make of smaller firms as well? Because when we talk about corporate governance, we usually focus on the big names. But what about smaller firms, and could they benefit from this cyclical rebound that we're seeing in Japan?
Certainly. So small and mid-cap actually more exposed to domestic activity. So the last year, because of the yen movement, the earnings had been struggling. But this year, certainly, they start benefiting from yen appreciation. But also, many Japanese small big-cap corporates have cash piles in their balance sheet. And then the corporate governance progress is starting from large cap, and we do expect that expand to small and mid-cap enterprises. So I think small and mid-cap is very attractive, universe to look at.
I'm smiling right now because I'm wondering if I have to go out into the Bank of Japan policy decision very soon after shows, and I'm wondering, are we going to see crazy sharp moves in the Japanese yen depending on what Governor Ueda says and what the markets could do? I mean, remember August 5th?
Well, this month, we do not expect any big surprise. But, it's important to observe what the actually BOJ is looking at, and then also the direction of travel for the next move. But I do not expect any big move after this meeting.
Okay, I'll hold you to that because I'm going to be out there in the sun. But let's talk a little bit about the BOJ and its ETF holdings as well. I mean, have we heard anything on what they plan to do with those holdings? I mean, they're a whale in the market, whether it's bond markets or stock markets, and could that have implications down the line?
Well, I don't think that any, the rapid action from BOJ to dispose ETF is coming out. So I think they're going to stay as it is right now, and I don't expect that affects any market, it affect the market movement.
Hiromi Ishihara, I'll hold you on to that. So head of equity investment at Amundi Japan, who's calming me down. So I'll head to the BOJ, and we won't be too excited today. But of course, you never know with these BOJ policy decisions. So you do want to turn to TLIV Go, to your function, to get that commentary from our expert editors. You'll have analysis and everything that happens around the BOJ today. This is Bloomberg. The European Union and China have agreed to intensify discussions on averting looming tariffs on electric cars ahead of a deadline that's only days away. For more, let's bring in our China correspondent, Minmin Lo. Minmin, so what progress have we seen from these talks so far?
Yes, the Chinese Commerce Minister Wang Wentao is on a whirlwind trip to Europe to try to lobby European governments to vote no on that tariffs. The voting was supposed to take place on September 25th, but Politico had reported that that vote may be delayed perhaps to September 30th. And the Chinese Commerce Minister has said he will be negotiating until the very last minute. He had a very high-profile meeting with the European Commission's Trade Commissioner on Thursday. It was a constructive one, and while there's no breakthrough on averting those tariffs, both sides have agreed to intensify talks. And we know Chinese companies have previously offered to put a price floor on those cars that are sent to Europe to address concerns around Chinese cars being overly cheap. But the European Commission had rejected that offer, but now that is apparently back on the table, both sides agreeing to relook at these price undertakings. So we'll have to see how the talks continue over the next 1 or 2 weeks and whether it will successfully overturn the vote on the tariffs.
And the Commerce Minister also met with some car makers in Brussels. What came out of that?
Yes, he attended an event, the China-EU electric vehicle event that was attended by 30 top executives of car companies from China and the EU. And China is now basically wielding the stick on one hand, threatening to retaliate with tariffs on European brandy, pork products, and dairy products as well. But on the other hand, it's offering this carrot of more investments into plants in the European Union, for instance, into countries like Spain and Hungary. So it's this combination of these two tactics, and the Commerce Minister is engaging on one-on-one diplomacy with the various countries that he has been visiting. So we'll have to see whether that actually bears some fruit over the next few days. And also, that was partly why the Spanish Prime Minister Sanchez had changed his mind on those tariffs as well. We know Spain had initially voted yes on those tariffs, but after a visit to Beijing, where he was attracting Chinese investments to go to Spain, he had changed his mind and called on the bloc to reconsider those tariffs. Shery.
Bloomberg China correspondent Ming Lo there. And we have more from the corporate front. Mercedes-Benz has cut its financial forecast for the year on a rapid worsening of its business in China. The luxury car maker now expects adjusted return on sales to be between 7.5% and 8.5%. The prior forecast was as high as 11%. The profit warning is the latest setback for Germany's industrial sector, left reeling since Russia cut off cheap gas supplies. Skechers shares delivered the worst daily performance since February after it warned that China's sales will be under pressure for the rest of the year. CFO John Vandermoor says the back half of the year is going to be more disappointing than expected. Concerns have been growing among global retailers about weakening demand from Chinese consumers. And of course, that weakening demand has also really hurt another company. Nike has ousted now CEO John Donahoe and is bringing longtime executive Elliott Hill out of retirement to return the struggling brand to its glory days. For more, let's bring in Bloomberg reporter Lily Meyer in New York. Lily, quite a turn of events, but tell us a little bit more about the new choice for CEO. Why Elliott Hill?
Yeah, absolutely. Well, thanks so much for having me. So, Elliott Hill is a very beloved former executive at Nike. A lot of the, former employees we spoke to spoke very highly of Hill, and he also has a history at Nike. He was at Nike for many, many years.
So tell us a little bit about what the problem was with the former CEO, John Donahoe. Why did he need to be ousted when he was really in charge of trying to transform Nike into this high-tech powerhouse? Why didn't that work?
Yeah, so Donahoe's time at Nike started off very strong. He came on right before COVID. He brought sales up. He really boosted sales of lifestyle sneakers. But things kind of fell apart after he cut relationships with a lot of their retailers. He pulled out from many major retailers, and then eventually the company had to embark on a plan to cut both finances and then ended up laying off employees as well.
I guess investors did like that because in late hours we actually had Nike surging. What can we expect for the coming months in order to keep investors satisfied?
Yeah, I think just a change in leadership will be really interesting for the company, and I'm curious to see what they say on their earnings call coming up in a few weeks.
Bloomberg reporter Lily Meyer there with the latest on Nike and that change at the top. Take a look at how Asian benchmarks are trading at the moment because we're headed towards a big BOJ policy decision. No change expected there, but we have seen the Nikkei already gain ground for 3 consecutive sessions, up 1.7% at the moment. The Kospi is also gaining ground. We had just CPI numbers earlier today from Japan with August core CPI rising 2.8% as expected and really above that 2% target when it comes to the BOJ's target range for inflation among consumers. It's been really difficult in Japan to try to revive consumer sentiment. We're seeing the Nikkei, though, gaining ground with tech and materials leading those gains, and the ASX 200 also rising about 0.5%. The Aussie also are really reacting to their own jobs data. We had the August employment numbers rising more than expected in the previous session, and that led to some gains on the Aussie against the greenback. More ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. Haidi, of course, we do have a busy day ahead of us. I'm headed towards the Bank of Japan policy decision after the shows. But you're yourself in New Zealand right now with a big speech and also interview coming up.
Yeah, absolutely, and it is BOJ Day, but it is really the focus on global central banks front and centre, even here in Auckland where we are today. We will be speaking to a special guest a little bit later on, which is, of course, a New Zealand Prime Minister. Christopher Luxon will be joining us for the annual Bloomberg address, and a key focus in that conversation will really be how he views the Kiwi economy. Remember, we had the GDP numbers out yesterday for the second quarter, shrinking a little bit less than expected, but still, this is an economy that continues to see fragility and economic momentum, teetering on the edge of a second recession potentially in as many years. So the question now, of course, with the backdrop of the Fed having pushed through with that jumbo-sized rate cut, will the RBNZ really be tempted to do the same? There's certainly plenty of proponents in the markets that are calling, for stronger action after the RBNZ somewhat unexpectedly started its easing cycle last month. We are seeing some signs of green shoots when it comes to this economy. Business confidence, for example, has hit about a 10-year high. But the question is whether we'll see kind of falling rates continue to push that through to a more resilient pace of recovery and growth. It has been a pretty difficult sort of almost coming up to a full year of the Luxon government. Remember, we were here, or rather we were in Wellington covering the election just last year, but the economy has certainly been very much the key priority. We'll be speaking to him about that, and Shery also speaking to him about some of the other challenges, of course, with every leader kind of pretty firmly focusing on the outcome of the US election in November, what that means for a small exposed trading nation like New Zealand, which over the past couple of governments had a very good relationship with Beijing, whether that could potentially be challenged depending on who we see in the White House.
Yeah, that's a key focus right now for leadership across the world, right? What we're going to get from the U.S. November presidential elections and what that will mean for partnerships across Asia. And you said it, I mean, Prime Minister Luxon has faced such a challenging past year, whether it's really tensions over race relations as well within the New Zealand society, but also, of course, widening budget deficits. And you said it, the economy shrinking. We're headed for the second recession within 2 years, and the RBNZ's abrupt turn towards a rate cut was so unexpected last time.
Yeah, take a look, Shery, at how we're trading when it comes to this end of the week for Kiwi assets. And, of course, a lot of discussion as to what these expectations are from the RBNZ. They were really front and centre in terms of leading this global monetary policy cycle and also one of the first to come into the easing part as well. We're seeing Kiwi stocks looking pretty lacklustre at this point, about as grey as the weather behind me, down about 0.5% at the moment. We're also seeing the broader sort of MSCI New Zealand looking pretty flat. The Kiwi dollar 62.35, a little bit on the back foot there, and also watching for how it's trading against the Aussie dollar as well, particularly given these concerns that the RBA continues to be kind of even further behind the curve when it comes to this start of the easing cycle, given how far we are potentially from our first rate cut here in Australia. And of course, as I mentioned, we do have our exclusive conversation with the New Zealand Prime Minister Christopher Luxon that's coming up in the next hour here on Bloomberg Television. If you're watching in Hong Kong, that'll be 9:40 a.m. to catch that, Shery.
And Haidi, of course, we're following the top political developments from around the world. The Lebanese authorities say 37 people have now died from this week's series of walkie-talkie and pager explosions, with almost 3,000 others wounded, many suffering eye injuries. Hezbollah's leader Hassan Nasrallah says Israel's suspected attack crossed all red lines but won't stop this group's attacks on Israel. The attacks have increased fears of a full-blown war between Hezbollah and Israel. The Wall Street Journal says senior U.S. officials don't expect Israel and Hamas to agree to a ceasefire and hostage release deal before the end of President Biden's term. That's even after the White House said the warring parties had already agreed to 90% of the deal. A Middle Eastern official also told the paper negotiators are in wait-and-see mode until after the U.S. election in November. Sri Lanka says it's reached an agreement in principle with bondholders to restructure over $12 billion in bonds. This comes just days before the country heads to elections. The government and bondholders agreed on terms including a 27% haircut on the nominal amount of existing bonds. The latest deal also retains a plan to issue notes whose payouts are linked to economic growth.
Shery, take a look at how we're viewing commodities across the board at the moment. Quite interesting, particularly watching the likes of iron ore. We had a little bit of speculation when it comes to the announcement from Beijing of the optimization of property policy. We know that the incremental stimulus and some of the fiscal measures for the property sector haven't really been supporting base metals very much. We are, though, seeing iron ore a little bit to the upside, actually trading in Singapore. Crude, though, off by about 0.25%. Still, if you take a look on a weekly basis, thanks largely to, of course, these geopolitical concerns, oil is headed for the biggest weekly gain since February, and also on account of the jumbo-sized Fed rate cut as well. Traders continuing, though, to monitor these simmering tensions in the Middle East. We're seeing Brent trading just shy of $75 a barrel there as well. WTI is up about 5% for the week. That soft landing sort of hope from the Fed is really driving some of the broader risk-on tone that we're seeing across commodity markets there. Copper is also seeing a little bit of a high there, hitting that 2-month high, with again the move from the Fed driving a lot of these moves across metals markets. More ahead on the Asia trade. This is Bloomberg.
We're seeing broad upside across markets in Asia following those gains that we saw on Wall Street, with the S&P 500 hitting that 39th record high this year. We're seeing information tech and consumer discretionary leading the gains on the Nikkei, although utilities are slightly under pressure today. The Kospi is also gaining for another session, up about 1%. The ASX 200 also gaining ground. Of course, we had the Aussie also stronger against the greenback on those job numbers out of Australia, surprising to the upside in the previous session. Take a look at how the Chinese yuan is trading at the moment, because we had seen that rally just before another bout of declines against the greenback, and we're headed this month for a fall when it comes to the yuan. And right now we're seeing it at the lowest level since May of 2023 against the US dollar, on a day, of course, that we do also have that 1-year medium-term lending and loan prime rates in China being announced. They're expected to be kept unchanged according to Bloomberg Economics, but we're following, of course, the trajectory of the Chinese economy very closely. Now, Neuberger Berman senior portfolio manager Steve Eisman says it's better to focus on the economy rather than the Fed when it comes to the United States. He told us why he doesn't see a recession coming in that economy as the market continues to digest the Fed's 50 basis point move.
Prior to Fed Day, I get 3,000 emails about what the Fed's going to do, and then the Fed does what it does, and I get emails of redlined. It's like every word that is changed is crossed out. Every new word is put in. It's like they treat this like Moses coming down with the tablets. Are the Ten Commandments still in the same order that they were in? And but it's an important communication function because the Fed knows they treat it like the Ten Commandments, so they take it seriously as well. But 25 basis points, 50 basis points. And every time the Fed does whatever it does, the market has absolutely no idea what to do the very first day. And then think about today. So the market's up a lot and rates are higher. Like, that shouldn't be. If everybody's so into, like, what's the Fed going to do? A rate's going to go lower, so the stock market went up. Well, rates are up and the stock market's up. So I think it's worth a lot more. It's much more important about how's the economy doing. And if the economy is fine, you could buy stocks, and if the economy is going to go into recession, you can't. The rest is gobbledygook.
What do you think is going to happen, though, at this point, though? Because you think about what the bond market is doing, and it's showing you a different story. The exuberance in the stock market is not being reflected in a bond market that seems to be more worried.
That's the point.
Who's right? Yeah, but
I know the bond market is worried. The economy is okay. So why should long-term rates go down that much?
Well, tell me this. You were looking at a market not only rallying to intraday records today, you're looking at a Philadelphia Semiconductor Index up almost 3.6% today. How are rates going to impact the AI story?
They don't.
So
they don't impact it at all.
What is the sense
like I
of
said,
this trade?
people spend a lot of money and a lot of time trying to figure out what Powell's going to do, and that was intentional, by the way. And I don't think it's look. If the Fed's raising rates very, very aggressively, that's important, and the Fed's cutting rates extremely aggressively. That's important. Everything in the middle, it's just not that important. It's better to focus on the economy.
So what is your take on the economy? I mean, we saw a retail sales number the other day that I think was surprising. If you don't see that the U.S. consumer sort of beats expectations every single time, right? So the economy's growing at like a 3% clip. Unemployment's at 4.2%, right? Inflation's back down to like 2.5%. Is everything good?
Well, not everything is good.
No, but I mean,
there has definitely been a slowing in the economy.
Was it a soft landing? Was it a soft landing?
Well, there's been a slowing in the economy. The lower-end consumer is somewhat stressed. They're spending less. But, there's been an increase in delinquencies, but not terrible. So on the margin, things are a little bit slower, but inflation is cooler. So as far as I'm concerned, things are fine.
Neuberger Berman Senior Portfolio Manager Steve Eisman speaking with our colleagues Shonali Basak and Matt Miller. We have more ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade, taking a look at some of the stories that we're following when it comes to the corporate front. And Bloomberg has learnt that Johnson & Johnson is boosting its offer to settle baby powder lawsuits to more than $8.2 billion. Sources say under the new terms, claimants could get bigger payouts and about $650 million in legal fees covered. The drug maker earlier offered a $6.5 billion settlement. J&J maintains it's now withdrawn. Talc-based powders never caused cancer. Elon Musk's ex has told Brazil's Supreme Court that it's appointed 2 attorneys to represent it in hearings. This comes nearly 3 weeks after a top judge ordered internet providers to block access to the social media platform. The appointment of legal representation could move X closer to restoration in Brazil, where Musk has been battling court-imposed restrictions. Apple has been warned by the EU to open up its iPhone and iPad operating systems to rival technologies or risk heavy fines. EU watchdogs say the bloc's Digital Markets Act means Apple must comply with strict new laws on making operating systems fully functional with other technologies. Apple has 6 months to comply or face potential penalties. U.S. Transportation Secretary Pete Buttigieg says his department wants to be more proactive in prioritising the interests of the travelling public. He spoke to us after his office gave the green light to the merger of Alaska-Hawaiian and Hawaiian Holdings.
We believe it really does represent a new chapter in the way the DOT approaches both consumer protection and competition. Our department has a lot of authorities, and in my view, that means a lot of responsibility when it comes to competition. I think the Department of Justice's role is well known and well understood. The Department of Transportation's role less so, partly because the department has not been very proactive over the last 30 years or so as these airline mergers have come along. But we are concerned with competition, and we are also concerned with consumer protection. And so when this deal came before us, we saw that the Department of Justice did not intervene. We still wanted to make sure that there were protections in place, which really come into 2 categories. One of them has to do with service itself, making sure that in places like inter-island service in Hawaii, that nobody is made worse off because of this deal. But secondly, consumer protections that are in line with what we're trying to do more broadly for airline passengers. Things like making sure that there's family seating available. Alaska does that. Hawaiian had not. We want to make sure it's the better and not the worse of those two, and so they've committed to that. And then probably the most new, and I think one of the most important things that we're doing, the rewards program, and making sure there are provisions related to that points and miles system too. That really is breaking new ground for us as a department, but it's increasingly a very, very important part of the customer experience, and it's looming larger and larger financially too. So we wanted to make sure it was contemplated in this agreement before we approved of the merger.
Secretary, we're talking about fewer airlines, et cetera. We're having a question about whether we're going to have fewer planes. What's the threshold for the United States government to subsidize Boeing at a time where there are real questions about its ability to continue to invest and its workers are striking?
Well, Boeing has historically been an aerospace leader, right now encountering a number of issues related to quality and safety that the FAA has required them to demonstrate how they're going to address, and, as you mentioned, labor issues as well. If you look at how Boeing competed so well in the past, it had to do with a focus on quality and on safety. And I believe that's absolutely compatible with doing right by workers and with Boeing's place in America's economy. But again, the most important thing, certainly from a Department of Transportation perspective, is that the safety and the quality are there, because everything else sort of gets multiplied by zero if you have those kinds of problems that can, sure, they can shake the market, but the most important thing is the safety of the traveling public.
U.S. Transportation Secretary Pete Buttigieg speaking with Bloomberg's Lisa Abramowitz. Now, trade tensions have intensified between the West and China, with alleged industrial overcapacity still looming large in discussions. While China seeks to quell the EU's concerns on massive EV subsidies, the U.S. has already locked in steep tariff hikes on Chinese imports. Canada has made similar moves, imposing a 100% levy on Chinese EVs and 25% on steel and aluminum. In response, Beijing says it will start an anti-dumping probe into rapeseed imports from Canada, saying they're being sold below cost. Let's bring in Mary Ng, a Canadian Minister of Export Promotion, International Trade and Economic Development. She joins us from Laos, where she's attending an ASEAN Economic Ministers meeting. Minister, great to have you with us. Thank you so much for your time. So really, the geopolitical landscape is becoming very, very difficult for all countries involved. Tell us a little bit about how these partnerships with ASEAN countries might help Canada in overcoming these challenges.
Well, Shery, it's always great to see you and to be on the program. And it's really terrific to be here at the ASEAN Economic Ministers meeting. It's what I look forward to my calendar every year. And before we get into the business, I want to actually just say, because I'm in Laos, how wonderful it is that the two countries, Canada and Laos, are celebrating our 50 years of diplomatic relationship. So it's even more special to be here. But look, to your question, ASEAN is really important to Canada. It is pretty central and prominently featured in Canada's Indo-Pacific strategy. And what are we really talking about here? We're talking about an economy and a region that is dynamic and growing. And what Canada is seeking to do here in the region is to deepen and to build resilient supply chain with the member states and the countries that are part of ASEAN. And I think that building of resiliency, and certainly through something like negotiating a Canada-ASEAN FTA, helps create better and more partnerships for those, for those here in ASEAN, and certainly with Canadian businesses back home.
We have seen, of course, tensions when it comes to securing the supply chains around technology and really pushing back against those ambitions from Beijing when it comes to advanced tech. How important is securing these supply chains? We have seen these explosions across Lebanon using pagers and other devices, and that seems to be sending even a higher global alarm about what needs to be done to secure that every part of these devices that are made globally remain in the hands of trusted partners.
Well, that's a really good point, because whether it is what we are seeing of late, but we have been seeing this, frankly, since COVID-19. the world will remember the shocks to our supply chains that we were experiencing, the disruptions. And I think that was really a wake-up call for all of us in the global trading system to make sure that there is greater resiliency, that we are creating these partnerships with partners and around the world. As I said, in ASEAN, which is really important part of Canada's Indo-Pacific strategy. What are we doing here? I mean, I over the last year and some have taken several trade missions specifically here into the ASEAN member states. I've been to Singapore, to Malaysia, Vietnam. I'll be in Philippines and Indonesia later this year, and other ASEAN markets into next year. But what does that really mean? It means businesses, Canadian businesses, coming here into ASEAN, creating those trade and investment relationships right here in the region. So we're creating those partnerships. We're creating those investment partnerships and those relationships. And when you're talking about supply chain, it is the company that is manufacturing a part perhaps here or creating a technology in Canada, creating that kind of collaboration and partnership to make those supply chains more resilient. And it's underpinned by strong FTAs. I also want to say to ASEAN colleagues here, remember, when you trade with Canada, you are trading with over 65% of the world's economy through Canada's free trade agreements. We have them with, in really important markets like that in the North America or the European Union and many, many of the Asian Pacific countries through the CPTPP. So working with Canada and us doing this with ASEAN member states means more resiliency underpinned by a rules-based trading order.
Minister, it was interesting. We heard from Ambassador May recently saying that Canada doesn't see Beijing as an adversary. To what extent, though, is it important for Canada to be in these emerging markets as a counterbalance in a way against, or not against, but alongside perhaps China's interests and investments as well?
Yeah, I mean, we've been really clear at the outset when we laid out our Indo-Pacific strategy, the relationship that we have with China. And the relationship, we've been really clear. It's one, we characterize it as the 4 Cs. There are going to be opportunities for us to cooperate. There are opportunities for us to compete. There, of course, are opportunities for us to challenge, as you are seeing in Canada's latest decisions with respect to tariffs on electric vehicles to deal with overcapacity and oversubsidization. But we also are going to coexist. So that is that's the nature of the way that Canada sees the relationship. But it is also equally important in this market of the ASEAN, 700 million people, the 5th largest economy, 3rd most populous in the world. I mean, this is really, really important because if I think about Canada, what is the strength between Canada and the ASEAN? It's the people-to-people ties. I mean, I'm a Chinese Canadian, but there are Laotian Canadians. In fact, the Canadian ambassador to Laos is a Laotian Canadian. We have Malaysian Canadians, Singaporean Canadians, Vietnamese Canadians, and so forth. So the strength of this people-to-people tie here in the ASEAN, I think, is a real area of strength for Canada and the ASEAN. And building on that foundation of not only the 50-year diplomatic tie here in Laos, but 47 years with the ASEAN, between Canada and ASEAN, and those people-to-people ties, and having frameworks like free trade agreements to which we are negotiating at the table, creates the right conditions for us to build more resiliency and create opportunities. At the end of the day, when I bring these trade missions to here into the region from Canada, there are many small and medium-sized businesses that are there. There are women-owned businesses, young entrepreneurs that are part of this, seeing this part of the market in this region to be dynamic for growth and for investment. We are attracting and seeing that interest as well into Canada from investors and people in the region. This is how we build resiliency, based on rules-based trade, based on these relationships, and building on something that Canada, I think, has a real advantage, which is this people-to-people tie as the multicultural and diverse country that we are.
At the same time, we see these tariffs when it comes to Chinese EVs, potential counter tariffs, potentially more negotiations on other trade measures as well. Do you see this as sort of potentially, dangerously slipping into the possibility of a tit-for-tat trade war? And does that risk actually worsen depending on if there is another Trump presidency after the election?
While Canada has always been, through our entire history, a rules-based country, we stand up for the rules-based international order. Canada is an open trading country, but we are a fair trade country. What we negotiate and what we stand up for are standing up for industries to ensure that there is fair competition globally. Fair competition for us also includes making sure that we are tackling climate change in the growth of our economies, making sure that our workers, have fairness in pay and standards. I mean, that's fair trade, and I do believe that our trading system around the world, I believe that other countries want that as well. So as a rules-based trading country, Canada lives up by our standards, and it is a challenge today. But I think we need to work through those challenges. But I think we also need to be honest about those issues that is causing perhaps some of the issues that is causing. That is causing unfair competition. And if I think about the work that we do in Canada through the Auto Group on reforming the WTO, that's some of the work that is really important for Canada as well, making sure that we are not only standing up for the system, but being a real participant to ensure that the rules-based international order is something that we continue to work with our friends around the world to do.
Mary Ng, Canadian Minister of Export Promotion, International Trade and Economic Development, thank you very much for your time today. We have more ahead on the Asia Trade. This is Bloomberg.
China is combining two of its largest state-backed brokerages to create a new behemoth. The merger of Guotai Junan and smaller rival Haitong Securities would create a new entity with combined assets of 1.6 trillion yuan. Bloomberg opinion columnist Shuli says, though, the deal looks more like a bailout, masking billion-dollar losses from bond underwriting. She joins us now for more. So, Shuli, why are we seeing these changes?
Well, it clearly is a bailout, because if you look at Guotai Junan and Haitong Securities, they are basically two sides of the same coin. They're both headquartered in Shanghai, so there's no geographical diversity, and they are strong in stock trading, margin financing, and weak in equity underwriting. And after the merger, they're still going to be weak on that. What's happening is that Haitong Securities has been very aggressive with their international arm, the overseas arm, and after being active underwriters and traders for China's high-yield real estate developers, they have incurred a lot of losses. And on their balance sheet, they still have billions of dollars of so-called unlisted investment funds that are level 3 assets. Basically, there is a lot of room for write-down. And there is a Chinese saying, basically saying that let the meat rot in the pot, not on the kitchen top. So it seems like, this so-called merger can basically hide basically a lot of future inevitable write-downs.
China has a long-held ambition of creating those aircraft carrier-sized investment banks that can rival Goldman Sachs, Morgan Stanley. What are the chances of that succeeding?
I think China can build aircraft carriers, but it cannot expect to have this kind of big companies in every industry. I mean, look at what China's economic priorities are. They're trying to build high-end manufacturing, right? And this kind of, say, chip manufacturers, this kind of companies, they're not well liked by capital markets because, investing period tends to be very long, for a decade or two, and the capital markets have no patience for that. Their earnings can be very volatile. They have a lot of geopolitical risk. So what's happening is that this kind of companies have to be financed by traditional commercial bank loans, basically China's policy banks. And the investment banks like, Guotai Junan or CICC, they may not really like it. And I just don't think investment banking has very bright future because of the economic directives of China.
Shuli Ren, our Bloomberg opinion columnist, of course, on what to expect from China as we also count down, of course, to the Bank of Japan policy decision coming out very soon. And the expectation for no changes in the rate, but we'll be watching commentary coming from Governor Ueda. Remember what happened after the unexpected rate hike on July 31st and the impact on the market. So we'll be watching the Japanese yen as well as Japanese stocks. That's it from the Asia Trade. Our markets coverage continues. This is Bloomberg.